But let's talk about Mahindra and Mahindra Financials. That particular counter is not seeing a healthy trading session in today's today. If you see the stock, last when I checked, it was down about 8% in trade. This is on back of its Q4 earnings. And to just recap the earnings for you, if you see the standalone calculated NII was up about 13% on a year-on-year basis, coming at around 1,474.8 crore rupees. You have PAT that is coming at around 150 crore rupees, which is down by about 32% on a year-on-year basis. Also, if you look at the AUM, it's up about 6% on a year-on-year basis. But let's take it across to the management of Mahindra and Mahindra Financial to understand more and delve more into their Q4 earnings. We're joined by Ramesh Iyer, who's the VC and MD of Mahindra Finance. Good morning, Mr. Iyer. Thank you for joining us on ET Now. Talking about your earnings, your Q4 did see some kind of resilience on the absolute gross NPA front, which has now come down on a QoQ basis, although the pressure on profits actually continue, which has actually seen a degrowth. What actually, according to you, led to the profit degrowth of 32% on a year-on-year basis, and also what led to the decline in the absolute gross NPA?
So, if you recall, in the previous quarter, we had talked about it where I had said the market is looking good in the rural market. December standalone was very good, and we did expect that the fourth quarter would be a reflection of what we saw in December. And we exactly saw it. We are extremely happy that the overall collection was very good. Our collection efficiency for March standalone was close to 110%. And I know rightly said the NPAs have come down, but you should also recognize the fact that the AUM has degrown, and that builds a little pressure on the gross NPA number because of the denominator effect, as otherwise the gross NPA would have been another 0.6% or so lower. Also that, the market remained very buoyant, the activity levels were high, the economic activity picked up, agri was good. Put all this together, I think the collection efficiency is a reflection of a good cash flow from that market, and that saw us even bring down the gross NPA. So far as the profitability is concerned, there is one additional line item which we've taken. We've taken an additional provision of about 1,300 odd crore. That is mainly to kind of bring down the net NPA to below 4%. We believe that as things open up going forward, things would get normalized. So it's always good to make whatever provisions that one needs to, looking at the market conditions, and then wait for the good times to return. So basically the profitability impact is on account of the additional provision that we have taken.
Mr. Iyer, one of the key questions that we are actually asking all the industry players is the impact of the second wave of the COVID-19 on growth as well as asset quality. So what are the trends that you are actually seeing across the regions on your collections, on your NPA trends, and also how do you see the disbursement growth being impacted due to the second wave of COVID-19?
So, in this round, as we all see, across the country, there has been an impact, and it's also going a little deeper. And we've already seen the sentiments of the consumer out there is a little subdued because, they're facing it possibly for the first time at this level. And therefore, it's a wait and watch approach very clearly. 15-20 days of April was normal, so we have seen some volumes happen. So the demand was there. The vehicles have now started getting available at the dealership. Unfortunately, we've stuck with the second wave. My view would be that this quarter is going to be a wait and watch quarter. Even we believe things would get sorted out, normalized, let's say sometime by mid of May, etc. By the time things come back to normal, people get back to activity, could possibly miss May, and then only from June can this start. I think the good news is that the harvest has been good in April. The yields have been good. Support prices are good. And I think the farm cash flow will hold up. We did see the infra activity beginning to happen, but possibly may go a little slow for a couple of months. So summarily, I would think this quarter generally would be a wait and watch quarter. One shouldn't expect a growth momentum, but everyone would try and watch, consolidate, take some process actions, and also would wait for what's the response from government or from the regulator, which could help the industry.
Mr. Iyer, if you look at what happened in the first wave of the pandemic, there was some relief given by the government as well as the RBI in terms of regulatory support. With what we're seeing in the second wave, are you expecting some kind of relief to come in once again? And similarly, are your customers also banking on something like this?
I think when we talk to the customers, they're only telling us one thing is, they need some more time to be able to repay their installment, even if they have the money. As I said, it's going to be a wait and watch. So they want to hold and wait for what unfolds, right? So nobody wants to really pay off the cash flow that they already have generated during this period. They're all very hopeful that on the ground activities are there. There are, clear possibility of the economic activity revival in rural. As I said, even the farm cash flows are good. The infra was opening up. So the customer expectation is give us some time. Now, how do we give them some time? It's either by restructuring their contract or moratorium. The preference would always be restructuring because the moratorium does start to build again on them a kind of pressure as things starts to slowly open up. But if you were to restructure, they get a longer period, EMI of a size that they are looking for. So two things very clearly coming out is they're saying during this period, don't build pressure on repayment, slightly bring down our EMI size so that we are comfortable to repay from the earnings and extend the period so that we can comfortably pay off. So I think restructuring is what they are asking in many words.
Mr. Iyer, you mentioned that you took higher provisioning in the fourth quarter to bring the net NPA lower. Do you think that you will need to take higher anticipated provisioning for the whole of FY22? And what kind of an outlook can you give us on the credit cost for FY22 compared with the previous financial year?
I would think that, with the overlay provision that we have made last all the quarters. So if you look at our book, we are already carrying upward of about 900 crore plus overlay provision plus the 1300 crore that we have made to bring it down to net 4%. So I think we are sufficiently covered because our coverage ratio is upward of close to 60%, 58, 59%. So I think I'm not overly worried on the current NPA book. Is there a additional provision required, etc.? But typically in the first and second quarter, even otherwise in the rural market, the NPA does inch up. Our expectation is things should get normalized by end of this quarter or at least surely by the second quarter. If that was to happen, then the next 6 months would see substantially improved cash flow, improvement in collections and bringing down of NPA. So we may not require to make substantially higher provision as we close the year. And currently we are carrying sufficient provision to cover for the current NPAs.
Mr. Iyer, let's specifically talk about disbursements. The disbursements have come down about 15% on a year-on-year basis. What is your overall disbursement and your AUM growth outlook for FY22? And also, what is the kind of disbursement trends that you are actually seeing across the states that you are present in?
See, if you see last year, first quarter was absolutely troubled quarter, right? April was a washout, May just about began to happen, nothing big happened. June saw some number. So if you were to make a comparison to first quarter of last year, I would expect this quarter would be equal to or even better than last year's first quarter. And same would be the story with the second quarter. But that is not sufficient from an overall growth perspective because, if the previous year was a very, very flattish or even declining year, no point in comparing to that. So from a potential perspective, I would think this 2 quarter would be a very subdued quarter. But from a growth over the previous year 2 quarters, it may register some growth, but that does not excite.
All right, let's talk about NPAs then. Are you seeing any specific trends on NPAs and growth across states that you're present in, given that states have different economies, different pressure points? What are you looking at?
I think, this time around, one thing we are seeing is not a total lockdown across the country. So therefore, there is some economic activity which is being pursued, though not sufficient. But that's one classic difference between last year's initial April, May kind of a situation to the current April situation. The second is, as I said, the agri is done well. So therefore, states like Madhya Pradesh, Chhattisgarh, parts of Maharashtra have all done okay for us. In as far as overall the COVID situation is concerned, it's a widespread kind of across, but states like Maharashtra have been impacted a little more. So we do see, even from our own employee side, moving out is restricted, branches opening are restricted. So there are states like Kerala, we have similar problem because of elections in West Bengal, activities were low for us. Assam was a little low activity. Other than that, I think Andhra, Telangana, Tamil Nadu was okay from an activity perspective. MP was average, Gujarat was average. So I would think very clearly from a pandemic point of view, there are a few states which are going through high pressures. Even we see UP, Bihar having pressure points, branches not opening all time. So there are 3 or 4 big states which are under pressure from the pandemic. But from an election perspective, all of us know West Bengal, Assam, Kerala went through that little delay. I think overall the story is that it is a kind of low sentiments at this stage. And we are all hoping that by mid-May things should open up and things should get normalized.
Mr. Iyer, finally, I'm clubbing actually 2 set of questions and wanted to know what's actually your outlook on the margin front, and also how sufficient are you actually on the capital front? Is there any need for raising capital further on?
So if you look at our capital adequacy, it is upward of 20%. So absolutely no need for fresh capital raise. So far as the margins are concerned, I think the borrowing cost has been at its best and the lending rates have not been downward trend at all. So therefore the net margins have actually held up or even improving slightly. But we are holding 3-4 months requirement liquidity to meet any kind of needs in the market if things were to slow down. So that puts a little pressure on our holding cost, but that really doesn't matter. But the margins are not an issue at this stage. I think the real issue is volume. And as things normalize, the volume should pick up.
Mr. Iyer, we leave it at there. Thank you for joining us on ET Now and talking about your earnings and the way forward for Mahindra Financial. That was Ramesh Iyer, who's the VC as well as MD of Mahindra Finance, talking about the earnings and the growth outlook going ahead.